Hey folks, welcome to the 1st of June 2022, and summer is upon us. So yesterday what you saw was what we talked about in the pre-US, selling down on oil to the 115s, picking up buyers as we can see this morning around that area. So what we're going to look at today is oil, S&P and the US 10-year T-notes. So all the big boys, all the big markets here to look at really. And so let's get over and have a look. So I released a video this morning talking about oil and why, fundamentally we've seen kind of just a pullback here. I want to just pull your minds back to 2007 over here, right? And so let me try and make this a little bit bigger. 2007. I forgot to actually adjust this level yesterday with the roll on the contract to the N22, but the low of 2007 coming in there, 2007 back here. At the 119 spot 77. So if we kind of go back to where we are now, that pretty much was the high of day, just a couple of ticks above there, shy of the 120s. But really, fundamentally, do reference the other video that I've put out this morning when it comes to the OPEC Plus, and the order of consequences of what this actually means for potentially now coming into an oversupplied market over the next 8 months. But just we came off of that high, reversed down. I think we still ended relatively good in good pricing, just around just below the 115s there, but not a big deal. So what I think we can do today, if we go into the 60-minute chart here, I think, look, we have a little bit of a gap below. It's not actually closed here to the tick at 114.55s, but nonetheless, you can see that push down anywhere near that gap was well supported this morning at about 7 a.m. in the pre-market there. German traders coming in for them, pushing this up. So pullbacks onto, pivot, I think will be quite well supported. That's technically sort of a significant high during the APAC session there. APAC high is technically actually at the top of the 7 a.m. candle, but we won't split hairs. So I think pullback onto pivot and VWAP should be supported. If it's not, I think, looking for buyers on the 115s. And if 115s doesn't hold, this is going to breach the low on the gap. And actually, I think we're going to trade through to 113s and 111s. Now, if that happens, fundamentally, what's going on is the OPEC falling out with Russia because Russia is banned from the EU now. And so exiting Russia from the OPEC group, that allows for greater production quotas for the rest of the OPEC group to pump essentially more oil. So seemingly bullish event here, but actually if you kind of have closer examination, you kind of buy the rumor, sell the fact, and you get the actual minutiae and the details thereafter. So nonetheless, if we go bid and we have breached that 119.77 to the upside, technically there's a lot of headroom here, Next level up is 131.97s. I definitely don't think we're going to trade that today or this week. But I think, for that, we actually are going to have to trade 111s and then go into a new cycle of auctioning up on this thing. So, just to kind of mark your card there for oil for today. All right. Looking at the S&P, actually, we'll look at the bonds first here. The T-notes futures, the 10-year. We'll get that up on the daily bars here. And as you can see, here is the market for the US 10-year bond. We are in this uptrend from the low of the 3rd of September 2013 to the low of the 1st of October 2018. Those weeks, that is. And if we just kind of make this a little more obvious here, you can see we're kind of holding a bit of a range. Well, we have held on the top of this range after a flummox below 117.20s. It's now testing just below this trend. I think it's very hard to trade this actual trend, especially now that it's been broken. But I think, further downside here which is what we're seeing on the German 10-year. I think, the yield is set to grow even further, and we could actually break and depart this trend to the downside. So while on the bonds, I have been looking at something similar here. That trade is totally toasted right now, and so we are going to have to be holding on the top of this range here for the bond 151.95s for me to want to be looking at the big trade thesis, which was the longs and the bounce out of this zone. I actually think it's starting to look like the yield is set to rise even further. I think it was trading 3.2% on the US 10-year at one point over the last 2 weeks. So really want to be open to a further appreciation in the yield on these 10-year bonds. Breaking down what has been 2016 highs, 2017 highs, and 2018 lows, right? So just be aware of that. So there's the bond. T-notes, this is a really good barometer, obviously, to see what the risk sentiment is. I mean, obviously, you can look at your VIX futures as well for the equities plays, but this is kind of a different, disjointed. You're not seeing that inverse correlation, long the SPOOs, short the T-notes. In fact, I think that hasn't really been a trade for, well, probably since the year 2000, maybe 2010. But yeah, still you have risk on, risk off moves, and you do want to be in the bonds when equities are getting hammered. So, but just be aware of that right now. So you've seen the DAX pushing down, finding support 14,379s as the SPOOs makes new lows, and the Dow defends the lows on pivot here. But yeah, looking over at what did I say we're going to look at? Yeah, SPOOs here. So before we do that, let's just get up our Nasdaq. Yeah, so SPOOs on Nasdaq yesterday. I was looking at this area to trade on the Nasdaq yesterday, 1255s to 1251s low. You saw the buyers pick it up there, drive back to the 12701s, and then market just really went dead. Pretty kind of quiet stuff yesterday. I think the Nasdaq finishing just in slight negative territory. Anyway, for the SPOOs and US equities in general, you're seeing here on the daily bars this lovely line in the sand. It's the lows of the 8th of May, or sorry, March, the 15th of March, lows of the 26th of April. Was pretty much the low the 29th of April, excess below on the 15th or the 5th of March. So it's a pretty strong line in the sand here, and really the SPOOs has to hold this area if we want to be looking for at least a retest on the 42-44s and this sort of trend that we have broken down. Switching this over onto the weekly here, you can see this is sort of a linear regression channel, up channel. And while we have broken out, technically we have pulled back and tested already. We could be heading south here. Just to add into this picture of risk, we can bring up the VIX here, Vix Futures. And this is monthly bars, right? So you're seeing this general pullback through 2020. Then the latter half of 2020 for sure, from these all-time highs, 80, 85s, and then sort of bottoming out through 2021 and 2022. We have this gradual trend up and rising. So as I was saying to the boys in the room, it's going to be really hard to not see at least the VIX try and retrace 50% of last month to the upside, and that is going to put a lot of downward pressure on equities if that happens. So really, we want to see the VIX. If you are on the short side, you want to see the VIX hold the close on the month of May, 2636 there, going over to a 15-minute bar. You've already seen this is the electronic opening price on VIX, 2645s. Seeing a little reversal down there to the +1 on VWAP, getting bid. I think my hypo for the VIX today is we go bid into at least 2668s and 75s. And then we'll see what this VIX wants to do for the month. I think, are we going to push to 27.15s and beyond, make a new high on the 2-month period? Or are we going to, sell down essentially through the 26s? So, selling down through the 26s will be, I think we're going to be on course for all-time highs by the end of the summer, if that's the case. And 2-3 Fed hikes at 50 basis points ago, be damned, so, and then we'll just be, up here, it's all priced in, and we're all rich again, right? So all right, listen, that's it for me for another pre-US session. I will not be on for the US session today, but I will be back with you for a full day tomorrow. Of course, the Queen's Jubilee starting tomorrow and going through to Friday, long weekend in the UK. So not expecting huge volumes out of London anyway over the next 2 days to finish out the week. All right, have a good one. Talk to you later. Bye bye.